ETH versus Sol, rest of the cycle. Which one do you like more?
I think you have to okay, it depends. It depends. So my bet would be that
GM, good morning. Welcome to the Milk Road Show, the daily crypto show where you sold early and now feel like the guy who left the game in the seventh inning and missed the walk-off. I'm your host, Jay Hamilton. It's Wednesday, September the 17th. Today, we're joined by Ryan Connor, head of research at Blockworks, and Jesse Eckel is back on the show, founder of Opact Venture and legendary crypto investor. Today, we're going to talk about Base Token is coming. Jesse Pollock teases Base Token at Basecamp earlier this week. What's going on? When's it coming? What can you expect? ETH versus Sol. Who wins for the rest of this cycle? And Pump.fun is absolutely ripping over the past month. If you've been listening to Milk Road, and if you're a Milk Road Pro member, there's a good chance you bought it because we signaled this just over a month ago. Is it too late to buy in? And more importantly, what is Pump.fun now and in the future? Is this the future of on-chain gaming? Is this the future of on-chain social? We're going to talk about that and so much more. Before we jump in, if you want a 5-minute read every day on what is happening in crypto, so you're up to date on all of the news, you should subscribe to the Milk Road newsletter. Hit the link in the show notes to subscribe today. It's free. We just wrote all about the Base Token yesterday. Great article. Check it out. Today's episode is brought to you by Figure Markets. Grow your cash like a bank. No lockups, just real returns. It's also brought to you by KGeN, the verified distribution protocol, changing the growth game. With that, Ryan, welcome to the Milk Road Show.
Appreciate you guys having me on. Big fan of you guys for a long time, and congrats on all your success, and excited to be here today.
Thanks, man. Jesse, what's up, man? Great to have you back.
Always great to be back, Jay.
Nice. Love it. Okay, let's start wide before we get into Base Token and Pump Fun and all that. Let's start wide because, Ryan, we've never had you on the show before, and at Blockworks Research, you guys are really one of the best in the industry at producing on-chain data that helps us understand what is actually happening on all these chains. What's the activity? And so I want to get an idea of what you're seeing from on-chain data, because I think it'll help our audience understand where we are in this cycle. So let me ask you that first, before we go into any of the data, let me just get your take. Where do you think we are in this cycle?
Yeah, totally. So a little bit of context before I answer the question. Blockworks research is very much like bottoms up today. We've made the the calculated decision to not opine on where we are in the cycle. Like is the 4-year cycle over as it topped? That being said, there's a reason that we came to that conclusion, especially now. And I think what you're seeing in the market today, it's like everything, like the on-chain data doesn't matter from a macro level perspective. The only two things that matter for risk assets going forward are the secular trend of both crypto and AI. So from an AI perspective, it's been an absolute boon for the economy and will continue to be for like 3 reasons. One is that mega cap companies that are throwing off, $100 billion in free cash flow per year have to invest in the AI supercycle because it's an existential threat to their business. The second reason is because venture firms have to invest in it because it's an existential threat to their business, and so do startups, right? That's the third reason. So you already see in the GDP data where I think half of GDP growth today is from the AI data center capex boom. It's going to dramatically change the margin profile of not just technology businesses, but across industries. And it's really like one of the only things that matters is like the ability and willingness of companies to invest in AI. And you see it in the macro data where like, look, I did macro investing for my whole career. Ran cross asset class portfolios, and I know the data better than almost anywhere else from like a macro indicator perspective. And I can tell you that everyone's macro models stopped working in November of 2022. When ChatGPT happened, the data did one thing, and the cycle just kept going. you had countless indicators that were predicting the end of the economic cycle, meaning unemployment rate was going to skyrocket higher. Actually didn't. It's like really plateaued for a very long time, something that's really abnormal in the historical data. And I think that's risk appetite from AI. Now, from like a crypto perspective, there's another secular trend where you have this technology that opens up new markets to every financial institution, to every tech company. And that could lead to massive cost savings for all of these companies as well. And we just opened up the floodgates of capital into that market. So people are going to invest because, again, there's margin to be had there, and, cycle be damned, it doesn't matter. So, obviously you're going to have pullbacks. You're going to have 5%, 10%, 20% pullbacks in the market. That's going to happen. Trump might scare the market again, but you want to be long risk assets given these really unique fundamental tailwinds.
Okay, I'm gonna turn that around and say it's fine. Here we have the head of research at Blockworks saying the on-chain metrics don't matter, but they do matter. They do matter, and you guys do an incredible job of producing them. So it is a great point.
Let me reframe it quick. Like it doesn't matter from a macro perspective.
Right.
It matters from an idiosyncratic bottoms up perspective, but from a macro perspective, you have two gigantic tailwinds that you want to look at the bottoms up metrics, which again, like Blockworks does better than anyone else.
Yeah. And it is a great point, especially for everyone listening to this episode, is it's very easy to get caught up in the day-to-day, week-to-week. And as an investor, that can really take your focus away from the primary goal, right? Which is the recognition that you are early to two of the biggest technology advancements and secular trends that are going to happen likely in our lifetime. I mean, I don't know. It's difficult to predict what's going to happen 50 years from now, but I think all three of us would agree on that. And that alone is an investment opportunity that most people don't get and don't have. And so keep it simple, stupid is always good advice in this case. But that being said, let's take a look at some of the on-chain data that we're seeing right now. And because the main thing that I want to understand is, and Jesse, you and I have talked about this a bunch in the show in the past, is it really feels like we're not in euphoria stage of this cycle. I'm going to keep using this term, the cycle, even though maybe the secular trend is way bigger than the cycle. But in this cycle, it feels like we have not gotten to where we have gotten to in past cycles in terms of the euphoric retail activity that we often see.
Yeah, I think that's right. I mean, I think you see it in this chart. In front of us, we have total network revenue per blockchain. As a stacked bar graph. So this is like the total that you've seen across crypto dating back to May of 2020. And you saw how crazy, I mean, you can see on the chart how crazy things got in 2021, where in a single month, like Ethereum generated close to 2 billion in revenue, right? Like that's insane.
It's crazy.
People were just slamming by. Now the cycle's like really moderated and market share has shifted dramatically, which is like, again, like that bottoms up story, right? Like you can't just blindly long crypto as much as like risk assets are going to have this tailwind. The internals of the market have shifted dramatically across many dimensions. And you see it in this chart where, Ethereum basically dominated, everything else was irrelevant. And then, Solana, Hyperliquid and TRON took over.
And when we look at this chart, where any predictions, where are we going with this? Because what we're seeing right now is over the past 6 months, it's been pretty flat.
Yeah, so I wouldn't, predictions from the chart, no. Like that's like personally, and I understand that you can make money this way, like looking at charts and extrapolating and, looking at past data. But I think you really have to think about the team's game plans and who the players are and who has the distribution going forward. So like I definitely have opinions on the mix of revenue in this chart for sure. We have strong opinions there. But like from this chart, like I don't think that you can tell much about what's happening in the future. Like what matters more is like, okay, what's Solana doing with BAM? What's that going to do with transaction activity if they can make perps work? What's Hyperliquid doing with Hyper EVM and the decisions that they're making to onboard interesting builders there? What's the distribution advantages of these relative chains? Who are they partnering with to funnel TradFi flows onto these chains? Because like, look, all that matter, like, I don't want to say that all that matters are the TradFi flows, but for the foreseeable future, like, that's probably your most important variable if you were to stack rank them. And the reason is because like crypto funds are small. A large crypto fund is like 2 to 3 billion AUM. That is a minnow in TradFi. That is a small size. And so when you start seeing like that type of capital shift into crypto, like you have to think about where are they going to put that capital to work. And those are the things that are going to meaningfully change this chart. That chart, like the chart that's in front of us, does not consider that fact.
The best audience to distribute your product to? Your super fans. Duh. But what if you haven't found them yet? That's where KGeN comes in. They help businesses scale digital distribution at a price that makes sense. KGeN's verified distribution protocol identifies the best users for your product and connects you directly to them. Ready to find real meaningful users for your next big product? Join the KGeN network today at milkroad.com/KGeN, spelled KGEN. Why do people invest in real estate? Because it spits off cash flow. But I'm not here to manage rental properties. That's why I'm looking at Figure Markets. Their new democratized prime product backs your money with real cash flowing assets and returns up to 9% APY. It's the first real world asset borrow lend pool built for everyone, not just institutions. Ready to lend like a bank and get more than the 5% Aave is offering you? Download the Figure Markets app today and get 9% on your idle funds. Go to milkroad.com/Figure Markets. Mm-hmm. Mm-hmm. If we take a look at a few of the chains that you mentioned, and you said you have strong opinion on the mix of these chains, I love hearing strong opinions. ETH, Sol, Hype. What are the other big ones here? TRON is also a big one here. Are those I want to capture all the ones that I want to get you to share your opinions on them. Is that the main ones here that I can see at least?
Yeah, from a network revenue perspective, yes. If you were to stack this for like application revenue, like the mix would be different, right? So like TRON would be irrelevant because all TRON's used for is like payments. There are really no apps over there. Base would be much higher because Base has they're generating like $30 million a month in application revenue. Solana is like at 135 or something like that, and a Hype, depending on you want to do the accounting, like they're annualizing at $1 billion, but it's like one app and it's hypercore. So this would look different if you're looking from an ecosystem perspective rather than a chain revenue perspective. But yeah, so those are the big players.
Okay, give us your breakdown of your opinion on those big players.
Yeah, totally. So I think it's pretty obvious that Solana is the fastest horse today. That ecosystem is number one across most of the measures that matter. So like from a backward looking perspective, like DEX volume, it's number one, something like 75% year over year growth in DEX volume. Application revenue, so on-chain revenue that applications earn on the Solana blockchain, I think it's like 135 million per month. That number is up like 135% year over year, I believe. From like an experimentation perspective, I think like it's qualitatively interesting that like everything happens on Solana. Whether it's the meme coin craze, whether it's the AI the mini AI agent boom and bust, whether it's like social experiments, prop AMMs, you have a lot of really interesting things that, or like even think of something like MetaDAO, Futarchy. All the interesting experiments seem to have shifted away from like ETH last cycle to Solana this cycle. I think that that's very promising. It's a place where people go to experiment. I think the other interesting thing about the experimentation bit is that even when experimentation starts somewhere else, it ends up happening on Solana at larger scale. So if you look at like, we have a chart here of like tokenized equities, where like tokenized equities started on Base and it just didn't take off. And then the activity just like meaningfully moved to Solana.
And
But I feel
tokenized
like
equity, it's still small, right? Tokenized
very small,
equity is,
very,
like,
very small.
very small, very
But-
exciting, very
right.
exciting. Like definitely the future, but so small.
But like you just see like you see the step function change when an activity starts somewhere that moves to Solana. I think the most classic example is virtuals. Like I remember reading the Brian Armstrong tweet where he said like, oh, like AI agents are happening on Base, and it was like at the beginning of the AI agent craze. And I was like, wow, Base is going to have this moment. Like they're going to own this trend. It did not happen. It happened on Pump. It happened on AI 16Z. It ended up not happening on virtuals. That activity went to zero very quickly. You saw that with things like friend.pet. You saw it with friend tech. It's just like things really haven't been taking off there. Not to say that they won't, but just given like the throughput advantages, the improved UX versus EVM land, like the experimentation happens on Solana, which is really interesting. They have because the experimentation happens there, they have infinitely more call options than other ecosystems, which I think is really interesting. And that's not to discount other ecosystems. Like we're bullish Base, we're bullish Hyperliquid, but I think that there's like a very obviously a fastest horse today.
Just to kind of push back on that, wouldn't you say, like you mentioned Hyperliquid, Hyperliquid is built, it's like an Arbitrum L3, or it's built somehow in the Arbitrum stack. So that's one of the biggest revenue generators today. So that would be outside of Solana. From my viewpoint, a lot of the revenue, and correct me if I'm wrong, but a lot of the revenue and a lot of the activity on Solana has been primarily meme coin driven. And if you were to remove the meme coin mania from Solana, how much, and this is I guess more of a question, how much of that activity left is meaningful?
It's about 60%, 60 to 70% of activity on Solana. Ethereum, it's about 20 to 30%, depending on your time frame. And for Hyperliquid, they're solely concentrated in perps. So yeah, these chains are all like different activity is happening on different chains for sure. But I think when I look at what Solana is doing, like they know that they missed perps. And they are adjusting with this new BAM architecture that Jito is rolling out so that Hyperliquid style perps can hopefully be possible on Solana, a similar UX, a similar level of throughput. And I contrast that with what the Ethereum ecosystem did when Solana started taking market share. They ignored it, right? They specifically said, this is not relevant to us. We're building something so much more important. So when I look at like the relative demeanor or like the commercial orientation between like those two chains specifically, the Solana ecosystem is very commercially oriented. I think that that's very important. They realize that they missed perps and now they're doing their best to correct it. Who knows if they pull it off? They could totally miss it again. So that's going to be something to watch. Like right now we're watching Drift very closely because their perps activity has like step functioned higher, and the team does seem to be like favored by a lot of ecosystem participants. So like we're watching that closely. We'll see how it plays out. But like that's not to discount anything that's happening on like Hyperliquid, for example. Like that you can't tell this. You cannot tell the story of this cycle without mentioning what Hyperliquid has done. And they basically used the Solana playbook, which is like Solana. They looked at Ethereum. They said like, hey, this is so decentralized that it's hurting UX. Let's not be fully centralized, but let's be sufficiently decentralized so that we can have good UX. And they took market share. Hyperliquid's doing the same thing, where they're going to go further on the centralization spectrum in order to have like a competitive UX and user experience to compete with Solana, which they've done masterfully.
I guess what I'm saying is, if you look at a lot of the breakout apps in crypto, three come to mind. One would be Pump, another would be Hyperliquid, and another would be something like Polymarket, which has achieved a lot of mainstream adoption. And when you look at Polymarket, that's actually on Polygon. When you look at Hyperliquid, it's kind of its own thing, but sort of built on Arbitrum. And you look at Pump, that's on Solana. But I guess in my mind, what I see, and especially when I looked at your chart of revenue, is going into the future, maybe a little bit less about a story of Solana or Ethereum or whatever, and more a story of these apps like Hyperliquid, like Pump, and like Polymarket. And at that point, like, does the chain even really matter? And I feel like the answer kind of is no, especially when you consider Hyperliquid is an Arbitrum L3. And like yet it's doing like $1 billion in revenue. It doesn't seem to matter where it's at. And the same thing with Polymarket, like it's achieved mass mainstream adoption being on Polygon, which is, it's not even a contender in terms of like people talk about. And so wouldn't it be fair to say that in the future, it's actually these apps and they're just going to go wherever, or they're going to have their own chains. And like this idea of like generalized chains seems less and less relevant as more value accrues to the apps.
So I would say that from agree with some of your points, disagree with others. I think, one, the framing of Hyperliquid being built on Arbitrum isn't necessarily true. It is its own chain, like all of these things. It's its own chain. Like posting a proof to a chain is like not being built on a thing, right? Like it has no real smart contracts there other than like a bridge, effectively, right? It doesn't pay rent when you post a transaction on Hypercore EVM. Like Arbitrum doesn't get a cut. They get, I don't know, like
Sure.
one millionth of the value, right?
Yeah. What I mean is when I bridge into Hyperliquid, I'm bridging funds on Arbitrum and then I'm depositing on Hyperliquid. So in
Sure.
that sense of like, I'm thinking more ease of access. Like when I think of Solana, I think of like the things I'm going to do on Solana. So I'm bridging funds over to Solana to go use those applications. Or when I think of Polymarket, like I have to transfer funds to Polygon and then onto Polymarket. But I guess I'm trying to say that like those chains don't seem to be a friction to those things. If the app's good enough, it achieves mainstream adoption and the money flows there. So what sort of like in the future, why does it matter what chain you're using, or like why are apps not going to just have their own thing?
Apps will certainly try to have their own thing. But I think what I would look to in the market is the empirical observation that it really sucks in technology markets to be on your own island. Like things really fizzle out and die in isolation. When you think of like what a chain has, it has, this is debatable, but this is the side that I come on. It has distribution and it has an installed base. Ethereum has distribution in the or base chain, right? In that they have integrations to all the centralized exchanges. They have wallets in millions of people's pockets. And they have liquidity that exists on that chain. And it's really hard to get that liquidity to move and those users to move. They have an installed base. You can debate the stickiness, but they have it. You can look at like the empirical observation that basically every app that's tried to do its own chain, X Hyperliquid, X like in the perp space, which like needs it, has not worked out empirically. You could look at what Uniswap has tried to do, and it's hurt itself. It's taken its eye off the ball. It isolated itself, and now it's lost market share to Fluid. It's quite a risk to go on your own island because you lose that pre-existing distribution and installed base. And like these arguments, it's it sometimes hurts to analogize. I think here it helps. You hear this argument with a lot of tech infrastructure where, I remember in 2014, 2015, the cloud was not going to make it. Margins were going to compress and it was going to be irrelevant because it was going to be pushed to the back. And, cloud businesses are arguably the most relevant businesses in technology markets. And then, when I look at the monetization methods of these things, like Solana's taking like 5 bips per unit of DEX volume. Like that's a really fantastic monetization method. And you can lower that by 80%. You can scale the network to get, billions of transactions per day. And you can make billions of dollars per year on that model alone. And that's really compelling. That's a really compelling value proposition and puts a strong fundamental floor on the token. So, yeah, I'll wait and see. Like if Pump owns distribution, right? If they have, 100 million mobile users as an installed base, they're going to try to do their own chain, no doubt. Is it going to work? I'm not sure.
I guess when I think of it, I imagine a future where, because right now moving between chains, there's a lot of friction, especially like bridging, different wallets, different like gas tokens, all that kind of stuff. But I imagine, at some point in the next 5-10 years, We have a lot better interop between these chains. And so I guess what I would ask is like a final question is, if we achieve some sort of interop where it's actually pretty easy to move between chains and you don't really necessarily notice the chain itself, think more websites. Like you have, you move between websites, you're not really concerned about it. Like we're not doing everything on AOL today. Wouldn't you agree in that environment that it would make more sense for chains at that point to have, or for apps to have their own chains? Because like Uniswap used as an example. I mean, I agree. It doesn't make any sense for Uniswap to have its own little chain outside of without interop. But when you have interop between chains, maybe that does make sense because if you're using an app on a different chain and it's just everything's getting abstracted to the background, then maybe they have their own hyper optimized chain for liquidity or whatever.
Yeah, I think that, look, it's up for debate. Who knows what's going to happen? Like markets are very, you have to be humble when you're dealing with markets, and we're all trying to predict the future, and that's inherently really hard. I would say that, my view is that the best interop is like one chain that does like a bajillion TPS, and you don't even have to think about it. That exists today on all chains. And to have interop work, you actually have to agree on all of these chains sharing the same standard. And when I look to the market and see, where's that progressing? I don't think it's progressing anywhere. Just if you look at like the OP collective, like they've been promising interop forever, and they're not doing it because it doesn't make sense for Base to opt in. Base loses from opting in to interop, right? It wants the whole thing. It doesn't want to share its liquidity. So Base is inherently hurt by interop, and any leading chain that's in the winning position, they have more to lose than they have to gain by saying, hey, let me interop with everyone else. They want the whole pie. And so I think those forces will prevail when you think of just like power laws and how these markets end up working out.
Okay, I want to move us on. I could keep going down this debate. It's a great conversation, but I want to talk about so much more in this episode, and we only have so much time. We always try to stick to 40 minutes, and Adrian, our producer's backstage, telling me already to move us. So, quick question before we move on, just to wrap on this theme, Ryan. ETH versus Sol, rest of the cycle. Which one do you like more?
I think you have to it depends. It depends. So my bet would be that Sol does better from both like a fundamental perspective and a flows perspective, and like acknowledging that we are in a flows based market today. So when I look at the numbers, I see like Solana trading at 45 times revenue, and I see ETH trading at over 1,000 times revenue. And I see Solana growing faster across application revenue, across protocol revenue, and across DEX volume. And I see actually like ETH contracting on some of those measures. So for example, like application revenue on ETH, it's actually contracted year over year from 53 million to 51 million. So when I see something that's growing faster and trading cheaper, I think it's like really obvious which one you want to bet on. That being said, crypto's in this unique place where flows matter more than anything else, because you have two assets that have been like blessed by TradFi and have a like funnel to TradFi flows. So conceivably ETH and BTC could keep outperforming this year. I think, but I think you have a Solana ETF coming up, and I think it's likely that the SEC approves Solana ETFs, and that's going to really change the dynamic to where like Sol is going to be like the first altcoin that's like blessed by the SEC and TradFi flows. So actually, I think you see Solana outperforming from here.
Jesse, what's your take?
I think that's a pretty good take in that it is kind of hard to tell. And it is, I would say that the Solana ETF's in the bag. I don't see why that doesn't get approved. And I would say it's really hard to tell because I do feel like Bitcoin and ETH, because they've been around longer and they have more of a name share, are sort of like uniquely blessed by TradFi. And Solana is going to be different than that. And I think it's going to get a lot lower flows. But being that it's smaller, I think it could still there's still a conceivable case that it outperforms, but it's just really hard to tell. You're talking about just kind of price action, and it's hard to tell.
Yeah, and I gotta admit, I've been so wrong on flows coming from TradFi. I've really underappreciated the demand coming from TradFi for crypto products. I thought SSK, the Solana ETF, was going to be a bust. I really did, and it's seen way more. I think it has over 200 million AUM right now, which I'm shocked by. The Bitcoin ETF kind of like blew my expectations out of the water, and and if you asked me, 4 weeks ago if I thought a Solana ETF would do well, outside of SSK spot ETF, I would have said no. But then, Forward Industries raised 1.65 billion in a very short amount of time. Like, I have to adjust my priors. I think that there's way more demand here than I previously anticipated. So I'm looking forward to seeing what happens there in October.
Well, and this kind of goes into the fact that right now a lot of these ETF flows are retail driven. They're not necessarily institutional driven, which a lot of people don't understand. And I actually think what it is it's a lot of that boomer money. If you think about it, like, they just have so much wealth, they were not going to ever do anything on chain or Coinbase or whatever. But when they're financial advisors, like, hey, do you want to buy this Bitcoin ETF? You want to buy this ETH ETF? They're saying yes. And so the question is, like, what are they thinking when the Sol ETF comes out? I don't know, but like, I really think it could go any way, because they are retail focused. They're not going to really care. There's going to be like, hey, what's the narrative? What's the story? And, should I own a certain percentage of this? I think where Solana maybe gets diluted out, it would be that if we have other altcoin ETFs, I think it'll be kind of like Bitcoin, ETH, and then like a basket of those altcoins will probably be how they allocate in. But I wouldn't underestimate like institutional like investment into Solana as well. And who knows, maybe that starts kind of tick up for Bitcoin, ETH, and Solana in 2026.
I think in the end that what I hear from you guys and from everybody is that you've got to own a basket of both ETH and Sol, unless you're really willing to bet on one, which, Ryan, I know you and the Blockworks team are willing to bet on one. But for so many, it is the safest bet, and the risk-adjusted bet is to have allocation to both, because both, it could go in either direction, but both are going to go up from here, assuming macro lines up the way we think it lines up. We'll see what rate cut decision comes this afternoon. Probably come right at the time this episode is released. So that's where I stand on it. Okay, I want to go to Pump.fun, because we've been talking about Pump.fun. Ryan, you guys have been talking about Pump.fun. And there's just so much happening over there right now. Not only is the token ripping, but the activity on the platform is fascinating to see. I'm going to bring up a tweet that you put out, and maybe this shows some of the data. And maybe, Ryan, you want to actually bring up this data. But like, when you look at the data of what's happening on Pump.fun, just tell us the story, Ryan, of like what's going on over the past month.
Yeah, so I think, like, first taking a step back, I'm gonna pull up that data while we're chatting. You can't, if you're considering Pump, you have to acknowledge the fact that it is one of the most successful applications in the history of technology markets. Cursor, for example, like the breakout AI app, it took them a little under 2 years to generate 100 million in ARR. Pump did that in 200. It's not ARR, it's trading fees, so just plain old vanilla revenue. But it generated 100 million in revenue in just 217 days. So while VC is standing here thinking like what a miracle circle is, Pump kind of blew it out of the water. And the meme coin like supply chain and what's happening in like meme coin land continues to exceed investor expectations, right? So, I remember in March of last year, March 2024, where everyone assumed that meme coins would be over in 2 months. And then I remember, post Trump, people saying that, meme coins are dead. And then I remember, post Libra, people are saying meme coins are dead. and meme coins continue to be like a top 1, 2, or 3, app by revenue, no matter the time frame that you look at. Even in the mini bear market that we had in April and May. So like the meme coin game, I think it's clearly here to stay. It's not NFTs. It's fundamentally different. And what you're seeing.
Let me just
Sure.
read off. Bring up the charts, Ryan. Let me give you a sec to bring up the charts because I just want to double click on what you're saying because you wrote a great post. I don't remember I think you wrote this like a year ago, maybe even more. November 17th, 2024. This is your periodic reminder that meme coins are here to stay. And I really resonate with this because I think that people misunderstand what meme coins really are because they have not had their full curve of their creation in how technology is going to use them and how users are going to use them. But I'm just going to read the first part of this. You said meme coins and social tokens reduce the mental friction associated with risk taking while simultaneously increasing fun. Want to start a side hustle that's really hard and requires planning, invest in the stock market. Now you have to learn the difference between earnings and cash flows. But meme coins and social tokens, trading these things is inherently hilarious. And if I lose $100 while breaking balls with my buddies, that's still a net positive outcome. If I were to guess, over 90% of males in my network engage in some form of sports gambling. I would agree with that. And they all lose money net. So that's obviously not why they do it. They do it for social entertainment. And this is so true. This concept of gambling and the future of attention online and then combining, like the combination of those two things makes me really believe that we don't understand what meme coins really are and what they're going to be 10 years from now, and that they are much bigger and they are fully here to stay. The question I keep asking is what is Pump? Is Pump a launch pad, as most people consider it? Is it a future social network, which it is sort of becoming with all the streaming activity that's happening on it now? Is it the future of creators? Because creators realize that you can make way more money on Pump.fun, as we're seeing currently. Now, maybe that's just a bit of a moment. It is so early, and there is it really makes me zoom out and sort of remove a lot of people have a bad taste in their mouth when you hear the word meme coin, right? And that is, you got to remove that bias and not be you got to have more of an open mindset, I think. But let me share a screen and you can feel free to comment on that, but then also talk about the data.
Yeah, totally. So look, it's there for anyone who wants to see it, right? Like this is a new game that people are playing. We've never had, like consumer applications, they live and die on the feedback loop. And the feedback loop has to give you like instant utility in like a very short time frame. You have to keep getting positive pings. You do not get that with traditional stock market investing. If you invest $100 in the NASDAQ, you might gain 30% in a year, and that is crazy boring. No one cares. Like meme coins will give you multiples on capital or a zero almost immediately, and that's why sports betting works, right? DraftKings will let you know within the day or within the game or within the pitch whether or not you're going to make multiples on capital or zero. Right. That is the feedback. That is the duration of feedback that you need to provide in consumer applications. And that's what, thousands of meme coins every day are delivering to the user of those coins. They're giving you a very quick chart to trade. And then, the game concludes with you making money or losing money very quickly. So you get that feedback. It also helps that it's hilarious. Like I think the Barstool comp is really important. Like I gamble on sports. I'm not a huge sports guy, but I do it because like I get to bust balls with my friends about it. Like if I win and they lose, like it's hilarious. We chat about it in the group chat and we make fun of each other and it's great. In the same way, like if you lose money on Iggy Azalea coin, that is hilarious. Like that's good content between friends, right? So like it's a game. It's had incredible PMF. And you see it in the numbers. At the time of Pump's ICO, I think it generated over 700 million revenue. Right now, it's annualizing at like 800 million or so, depending on the look back period. I believe that's a 30-day look back period. And from a year-over-year growth perspective, since last September, Pump.fun revenue is up 400% year over year. And if you look at the greater meme coin supply chain, so if you think of all trading bots, you think of all launch pads, You think of like wallets that are typically used for meme coins. That sector's up like 300%, right? So like this game is not slowing. People will index to like the week that Trump coin launched. I think that's incorrect. It's like, it's like indexing to your like most viewed day for like, for website views. Like anyone who runs a website know that that's not like how you analyze your traffic, right? You kind of want to get rid of the outliers. And if you look at this chart, like the trend is up, and the next leg of Pump.fun is live streams, and you're starting to see very, very early signs of PMF there. So I think it's the most exciting, one of the most exciting apps in technology.
So here we're looking at total revenue. Let's look at creator rewards, because that is a very interesting chart.
Yeah. So creator rewards just had a step function change in activity. So we actually eclipsed $4 million twice on the daily for rewards earned by creators. This is primarily through live streaming and token trading. And we're seeing early signs that like Kick creators, for example, are actually getting excited about Pump.fun, referencing Pump.fun, and perhaps even multicast streaming on Pump.fun. So really exciting, exciting experimentation.
Can you just frame that for somebody who hasn't used Pump.fun as a creator? Like, how does that compare to the way creators make money on like Twitch or other places?
Oh, totally. Yeah. So, if you're a live streamer, you could go to a live streaming platform and you could sell subs, or you could get a cut of ad revenue from like the platform's creator fund to make sure that you like stay there and that you're happy. You can also sell products. You can also do ad placements, but by and large, like those are like the ways that live streamers make money today. Pump is coming for that market. They're with native live streaming on their application, both mobile and desktop. Now, like, why live streaming? I think it's actually a pretty savvy move. So if you look at all the modalities, you look at image, you look at text, you look at video, most money changes hands around the video modality. It does not change hand over text. It does not change hands over image social networks. It's primarily through live streaming. And I think the comp there too is sports betting, right? Like people want to bet money and watch the live thing happen. And you have this like unique kind of trend in crypto and trading where people will watch people trade. And it's almost like, you're watching Barstool Sports and you're watching like your favorite influencer like bet on his game, or watching him like go through the emotions of putting money on a horse race or money on a football game, and then they want to bet alongside that person, or they want to bet against that person. So Pump.fun has native live streaming on the product, and its inherent advantage from a monetization perspective is that when you launch a token alongside with the live stream, the creator gets a cut of the trading fees associated with that token. Now, it's super experimental, right? But like this is a lever for creator payouts that other platforms do not have, and it's costless to the Pump team, which is really interesting. It's an inherent advantage when you pair live streaming with token trading. And the interesting thing about token trading is that it is incredibly inelastic. So, fees for trading meme coins, for trading creator tokens, are routinely 1% or more. And all in, some of these trading platforms will make you pay 2% per trade. Now that makes sense given the upside associated with these things. So, it's a really interesting advantage that Pump has in the live stream market.
What's your outlook for Pump? I saw you put out a tweet. I think this was yesterday. Let me pull this tweet up. You said discernible path. Oops, wrong tweet. 1 second. Discernible path to 10 billion in revenue for Pump. 10x multiple gets you to 100 billion FDV. Is this your outlook?
So that is that's certainly a bull case. But look, you're looking at an application with limited distribution at the beginning of like a crypto super cycle where we're going to put wallets and stable coins in billions of people's pockets over the next few years. Is it is it unrealistic to think that Pump can generate $10 billion a year in revenue in the foreseeable future with those two tailwinds, and it being at the intersection of what is objectively the most popular use case in crypto, or maybe second most behind perps? It's not unrealistic at all. It's not unrealistic at all. And it's trading cheap. It's, if you were to look at the, trailing 30-day earnings or 30-day revenue and annualize that, you're only trading at like 7 times revenue. It's cheap.
It's very, very low for crypto and for tech.
Yep.
Jesse,
cheap.
what's your take on Pump?
I would love to see any app hit 100 billion in FDV, just because I really think that we need to get away from this like chain. Everything's focused around chains and more focus on app. Everyone knows this. Everyone thinks this. But in terms of like Pump as a platform, and as a creator myself, I feel like it's still really, really early days in that, like, I actually don't think that they found the winning formula. I think meme coins have worked in the way that they've worked so far, but I do actually think people are getting burnt out and the games are getting shorter and shorter. That being said, I think the Pump team is really smart in that they're pushing out into live streaming and all these experiments, because in the end, I do think they've stumbled onto just probably $1 trillion market in the future, and that like it's like digital Las Vegas. Exactly what Ryan was saying. All that sentiment of like speculation and people loving it is true. I just think there's probably going to be a better way to do it in the future that's even more fun, even more maybe gamified. And I don't exactly know what that is, but even like the streaming function, like I would never do a live stream like that, just because you burn your audience like in one go. Like there's just no way for people to not hate you by the end of it. And that's kind of how it is with meme coins. So how do you make that into long-term value, or how do you do that in a way that's more gamified and fun? I don't know the answer. I've seen a couple cool, interesting experiments. There's this one team, if you guys seen that, was it Infected.fun from the original base, they're now in Solana, where they had they were different diseases, and the diseases were basically meme coins, and you would buy the disease you thought would infect the most. And then each of the diseases gets eliminated. That capital rotates into the other tokens until there's like one final winner. And it was a lot more gamified. And I think now they're doing like a drug dealing one where it's like different drugs you deal, and you're trying to like build a drug empire. I think there's probably experiments like that are going to play out. And in the end, we're going to find probably not just one, but like multiple versions of how to do this kind of digital Las Vegas gambling thing. But yeah, I would consider meme coins as a category, not even really crypto as much as like an app or a use case of crypto as a categorically.
Yeah, I hear the burnout comment. As a user, it's the game evolves over time, and it's not the game that you used to play. And like, I don't gamble in Vegas, and I'm not a huge sports gambler, but I do meme coins. My pushback on the burnout thing is like, one, you don't see it in the data. Now you can argue, is it, what's the mix of bots versus humans? I would argue that that's kind of the advantage of meme coins. Like if you build for bots, they're high turnover, they pay a lot of fees, they do a lot of volume. That's great for your app if you build for bots. But you don't see it in the data. Here's quarterly meme coin volume. Just last quarter, we hit new all-time highs in quarterly meme coin volume.
Fascinating. I don't think most people realize this.
This is across all chains.
It's down.
Yeah, this is across all chains. And it's broad meme coin volume, right? So like you have your majors in there, which are a large percentage of it. But Pump.fun bonding curve volume, that's at multi-month highs. So I think it's the highest level it's in 7 or 8 months. And we're at multiples of last year's activity in terms of meme coin volume. I think the other interesting part is like, what can the Pump team do from a product perspective to make the UX better? It's discovery to me, right? Like if you look at your Axiom feed today, you're just getting everything that comes out. Every coin that gets printed, you see. There's no reason, like if that were your Twitter UX, you churn, right? Because you don't want to see every post. So you need curation, right? You need some AI enabled curation on top. And that's how you keep the game fresh and you keep the people on the app and trading, is just like a better method of curation. And I guess my last point there is that like, I don't know. When it comes to gambling, and I think meme coins are a little more than gambling, but when it comes to gambling, like I don't think people get burnt out. I think you look at the longevity of Vegas, and it's like, it's cyclical for sure, but like we're at, people are more engaged than ever, and it's been around for 1,000 years, and gambling itself, and it's not going anywhere.
I don't think gambling is going anywhere, but I would say that the trend of like usage going up could also be something along the lines of like the kind of the further down you are on buying these things, sometimes the more you double down, triple down. But I guess what I'm trying to say is more overall sentiment. People used to love trading meme coins, and not that there still isn't people, but I've noticed there's a lot less, and there's a lot more people that just don't seem to like it or enjoy it in the same way. I don't think that means they'll stop. I think anytime you have like this catalyst event like Dogecoin ETF or so-and-so launches a token, it kind of reignites the market, live streaming. And I think the experiments will keep playing out. I was just more highlighting that I think we're in the very, very early innings of what meme coin trading looks like. And I think it's going to, 5 years from now, 10 years from now, I think it'll look radically different than it does today. And I think it'll be a lot better overall experience and a lot bigger of a market.
Yeah, I think so. I definitely agree there. The game is going to fundamentally, we're very early innings here. Like I said, they don't even have basic discovery. There is no curation layer. You obviously need a curation layer. Like think of social media, like you have a different curation mechanism per user. Every single person's feed is different. If you go on Axiom, everyone has the same feed, and that just doesn't make sense.
Before we wrap, I want to get both your takes on base token. Jesse Pollock teased base token earlier this week. No set release date, no information yet on what this is going to be, what the tokenomics are going to be, but seems likely that we are going to get a base network token at some point in the future. What is, Ryan, you can go first. What's your take?
Yeah, we're rooting for base. One of our top picks for 2025 was the base ecosystem. So, we think that they're well positioned to do well for the foreseeable future. And I think they do well with or without a token. I don't think it matters much. However, I think they are in a tough place with the token because they have common stock holders. And, it was way easier for CZ to do the BNB token when he owned the whole thing. And he owned most of the supply, and he didn't have quarterly reporting to do, and the U.S. SEC and other regulatory bodies and politicians to make happy. Brian doesn't have that luxury. He's in a much trickier place, which is why they teased a token and they didn't promise a token. We're exploring it, right? So I think that tells you all you need to know. That being said, though, I think base can do fine for their foreseeable future without it.
And I would be kind of in a similar camp where, dude, I love layer twos. I definitely lean a little bit more, obviously, in the app chain kind of thesis and kind of the vision Ethereum has. But I don't see why base needs a token. You have Coinbase stock. I don't even see what they would use the token for outside of like governance. It makes a lot of sense for Solana to have a token. Makes a lot of sense for Ethereum to have a token. But for base, unless they're going to do some sort of weird revenue share or something like that, it feels like another token that maybe is unneeded in the crypto space.
Yeah, wasn't there? I think that there was something like signaling from the SEC or CFTC that's like L2s are money transmitters or something like that, or L2s are actually exchanges, like centralized L2s. Like maybe it is to decentralize that infrastructure, but like to like avoid like certain regulatory requirements. But then you still have this problem of that income used to go to Coinbase and now it goes to this decentralized body. Like I don't know, that seems like a really hard conversation to have with the majority of shareholders. It's just weird.
So maybe the outcome of this is no token in the end. Is as much, what would you put the probability of there being a token versus no token?
I think it's high. I think they're eventually going to do it. I think that the problem is, though, it just might not be what the market wants. 2024 and 2025, you saw the market shift toward an alignment between the value that a project or protocol creates and the token. If you did not align value between the project and the token, you were punished. And that's what it's going to be like for the foreseeable future, frankly, because institutions are entering the chat and they care about things like that. So if you can't pull that off, then you have to go like the Zora route, where you just like do a meme coin, which I don't think they'll do, but like, I don't know, to take away, to funnel value to this token away from Coinbase common stock is going to be almost impossible. I don't know how you do it, but I think they'll do something. They have to do something.
I think they got to do buybacks. I think they're probably looking at BNB token, and they're probably saying, oh, we could have our own token and it'd be the base token. And I feel like they'd likely follow a similar model. Like if that's kind of what their framework is, then they're going to try to do buybacks. They're looking at like that. What is BNB, like 100, 200 billion or whatever right now? Yeah, I would say also it's like the probability is really high that they launch it, because they seem to be really okay with experimenting and just doing crazy things on chain. So I wouldn't be disappointed if it had real like buybacks and stuff. I'd be happy, because that's more leaning in the right direction of kind of like where crypto should go. I don't know how that works with the stock and everything like that, but that would be good. If it ends up being a governance token, then I'd be really bummed about that.
We'll have to wait and see. Ryan, Jesse, pleasure to get you on the show today. Really appreciate both your time.
Yeah, it was
Thanks,
great.
Jay. Appreciate it, man.
As always, got to remind you guys, none of today's episode is financial advice. You should do your own research, and if you need help with your investments, you should speak to a professional. Today's episode is for entertainment and informational purposes only. As I said at the beginning, if you're not subscribed to the Milk Road newsletter, you should subscribe, because if you want to learn more about Base Token, the Milk Road team gave their opinion there. Thanks so much for listening in, everybody. Have a wicked awesome day. We'll see you back again tomorrow. We're sending Kyle Reidhead, our head of research, to the UK's largest Web3 summit. I'm talking about Zebu Live, happening October 21st and 22nd in London. Want to join? Use our code MILK to get 20% off your tickets. Hit the link in the show notes and say hi to Kyle for us. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.